We at the Everything Red Deer podcast acknowledge that it is recorded on Treaty 6 and Treaty 7 land, as well as on a historic gathering place of the Métis. We thank the elders and knowledge keepers who remain with us today and those who've gone before us. This acknowledgement is small, but meant nonetheless as an act of reconciliation and gratitude.
Local, credible, now. You're listening to the Everything Red Deer podcast, powered by RD News Now. We talk to the movers, shakers, and newsmakers around Red Deer and Central Alberta, then bring those interviews to you. And now, here's your host, Josh Hall.
Welcome back to the Everything Red Deer podcast. Thanks for tuning in. My name's Josh Hall. Well, we've had a busy week on the podcast, veering off from our every Friday schedule a couple times now. This past Friday, we spoke to the National Farmers Union about diversity, equity, and inclusion, and how Canada's agriculture industry is standing by DEI despite attacks on that area by the American government and large corporations. On Sunday, we brought you a conversation with Keith Myrall, father of Brock Myrall, who was one of the 4 RCMP officers killed 20 years ago as of March 3rd in Mayerthorpe, Alberta. If you haven't heard those episodes yet, I'd greatly appreciate if you took the time to do so. They were some pretty decent interviews. But today, it's a historic day, though not necessarily for the right reasons. Donald Trump, president of the US of A, has imposed 25% across-the-board tariffs on Canadian products. I'm sure you've heard. Meantime, Prime Minister Justin Trudeau this morning called this a, quote, very dumb thing to do, unquote. With Canada immediately imposing 25% retaliatory tariffs on $30 billion worth of American products and expanding that to cover another $125 billion in U.S. goods in 21 days. Even Ontario is scrapping its contract with Elon Musk's SpaceX, which provides Starlink internet service to remote areas of Ontario. With the unpredictability of Trump and also a new prime minister to soon take over on our side of the border, who knows where this is going to go? So on the episode today, we have some expert opinions for you to take in. We're talking to Dion Zakuski of Scotia Wealth Management about money, as well as Darren Gagnon at Lacombe Ford on the impacts to the automotive industry. And we hear from Chris Windrum, who is leading the way these days at Build Central Alberta, and he has some insight into how home building may be affected. For a whole lot more tariff-related coverage beyond what you'll hear on today's episode, visit rdnewsnow.com and find the Alberta and Canada pages. There's lots of material from us as well as the Canadian press that you can sink your teeth into. Let's jump into our interviews now. We'll be right back after this brief interlude. We're joined now by Dion Zakuski, Branch Manager and Portfolio Manager at Scotia Wealth Management in Red Deer. Dion, first of all, thanks for joining us. It's a big day. You spend a lot of time dealing with money, and that's what this ultimately comes down to, the almighty dollar. What would your message be to people in terms of reaction to these tariffs and what the biggest concerns are?
For sure. Our biggest message to people right now is, to focus on what you can control and what you can't control. We can't control U.S. trade policy, and our thoughts is that, we don't believe that these tariffs will be on for the long term. What Trump's trying to do is bring, trade negotiations to the table to work on across various sectors. So what we're thinking is, yes, tariffs do have definitely a short to medium term economic effect, but at the end of the day, markets are actually pricing in that these won't stay on for a very long time, because if they do, that could tip not only the Canadian economy into recession, but will definitely harm the U.S. as well. So we know that Washington doesn't want to do that. So what we're telling our clients during this time is to stay calm, keep focused on what the long-term goals are, and to remember this is a great reason why we have balanced approach to our holdings and have investments that are not just in the market, but also have, safe and defensive parts of the portfolios as well.
What has the immediate reaction been with the stock market?
They certainly have. Yesterday, markets finished significantly lower. Today, they're also deep in the red. And we did some analysis to see that even though, the first couple of days of March have not been pretty, and we just finished a relatively volatile month of February, that major indexes, our Canadian TSX and the U.S.&P, the U.S. S&P 500, are basically back to where they were in November of 2024. So even though it feels like this has been a significant drop, it's really just taking us back a few months to where levels were before. And our view is that, yes, there will be continued volatility as long as these tariffs remain on, but assuming that negotiations eventually take place and some of these tariffs are eliminated, we think then, upward trends in the investing climate should continue.
Dion, in last week's Market Watch, which our readers can find on rdnewsnow.com every Friday, courtesy of yourself and Scotia Wealth Management, it talked about tariff-caused uncertainty weakening consumer sentiment. What does that mean now that the tariffs are in place?
Consumer sentiment has actually, reached levels that, or consumer sentiment or concern, and that's basically expressed as levels of purchasing and savings, are basically reaching levels that have been seen back during the times of COVID. So what that's saying is the general population is seeing, the potential effects of these tariffs and are really in a wait and see mode and not wanting to spend. And it's important that consumers do spend because then that generates growth and keeps the wheels of the economy moving. When that ceases to exist, that's when, there's less purchasing going on, there's less goods being bought, obviously, which affects corporate profits, which affects the economy and has that ripple effect all the way through.
Where else are you seeing impacts?
We also watch bond yields or bond rates because that's also an indication on is money flowing to safer assets as opposed to growth assets like you see in the stock market. So that obviously has been happening in the short term here. Even areas such as gold. I mean, gold's reaching close to all-time highs again, getting closer to that $3,000 mark per ounce. Today, as we speak, Josh, it's at 2,922. So the all-time high was 2,939 on my screen here. So we're approaching all-time highs on safe havens such as gold. So we're watching a lot of things at the same time, and basically, like everybody else, trying to decipher, okay, what's the correct game plan going forward here. So obviously, there is near-term concern, but like I mentioned earlier, we are confident that there will be negotiations beginning that can help to alleviate some of these concerns. What we don't want to have happen is obviously a global trade war, and we're already seeing Canada's implementing its own tariffs on the U.S. China has retaliated with their tariffs, and if that keeps happening around the world, back and forth from the U.S., then in the end, nobody wins from a trade war. So that's the biggest concern that's hanging over the economy and the investment markets at this time, and we just have to be hopeful that it will be a short to medium term effect, not a long term one, because the long term effects could result in potential recession down the road. Mexico is very important as well. They're also in the crosshairs of the U.S. And what's interesting, I mean, if you look at a lot of the supply chains, autos is a great example of that. I mean, whether it's from Eastern Canada, like Ontario, or Mexico, there's certain components of automobile manufacturing that can cross the border 2, 3, 4 times before final assembly. So if that's being tariffed both ways, then obviously that's going to add significant cost to the end product. if the end product cost is a lot higher, consumers will hold off on buying those products, and then eventually you have obviously higher increases of inventory. Businesses earn less in revenue, and then the ripple effect to the negative will continue. So that's why we really believe that because of the supply chains that are so interconnected, that eventually Washington will have to take a step back and look at the potential damage to its own economy.
Well, Dion, this has been very informative, but I have one more question for you. If someone is thinking about investing their money, whether they're going through Scotia Wealth Management, a bank, or something like Wealthsimple, for example, is now a good time to do so, or should they wait?
That is a fantastic question, Josh, and one that we're
Okay,
getting
thanks.
regularly right now. My comment to that would be there's potentially some strong opportunity building here. Our our plans would be, if people are currently invested in a balanced approach, then just hold what you have. Definitely don't sell, and I'd be a little bit patient to add to it. If somebody is just starting to invest, then I would suggest to start to put some of the money to work, start to put some of the money towards your investment portfolio, but definitely keep some aside, because the volatility is going to continue in the short term here. That could provide, more opportunities down the road. So long story short, definitely look to start building the investment plan, and just over time keep adding into it. And that way, even if the markets do continue to be volatile, you're going to be able to average in at a lower cost level, which over the long term is going to be very powerful.
And do you have any final message for folks?
Like I said, what we're telling our clients is, just to stay calm. We're in good shape. We're in good position, and we know that the trade tariff situation isn't going to last forever, and that as long as they don't stay on for too long, then we should see some more positive gains in the future. We're just definitely in the weeds today.
Now we jump into a chat between RD News Now's Ian Gustafson and Lacombe Ford's Darren Gagnon.
First of all, what do you think the potential impacts are on the sector with these tariffs coming in?
The automotive industry executives in Canada and the United States that I read, and they've basically said, worst case scenario is the automotive production chain closes down in 2 weeks. And the best case scenario is, a 15 to 20% increase in vehicles, and that are ordered after this date, and and parts supply chain will probably be hampered again, as it was during the pandemic, which will probably drive up prices for the consumers on parts and auto repairs.
Is there any immediate impacts at this point? Like, are prices going up? Anything like that?
Well, I can speak for Ford Motor Company, but I'm quite certain the other manufacturers did the same, that there was a price increase imposed over the last couple of weeks on most of the vehicles.
Do you know how big of a price increase?
All F-Series trucks received a price increase of $1,500 on the sticker price.
Is that pretty significant?
At this time of the year in a new model year, yes.
And how long do you think that this could last? I guess it really depends on what the U.S. does, if they bring the tariffs away. But do you have any thoughts on that aspect? How long I guess this could be in place?
I don't know. It makes no sense. I'm not sure what's going to happen. I'm quite anxious to see when the heads of the automotive manufacturers that have plants in North America and depend on the automotive parts chain, supply chain, will stand up and make bold statements or possibly take legal action because they have been quite silent till this point.
And so does Lacombe Ford, do they import from the US or do you guys have a factory in Canada?
All of our vehicles are purchased from Ford of Canada, but Ford of Canada gets most of the assembled vehicles from the United States. There is some final assembly in Canada for some vehicles, but not as much. But it's not that; it's that the the trucks. Canada has yet to announce tariffs on automotive parts or automotive vehicles coming from the U.S. to Canada. So that there's no tariff on that, but the price of vehicles that are assembled in the U.S. will go up because, many of the parts go back and forth across the border a few times, so they'll be tariffed multiple times. And major components of most of the vehicles are manufactured in Canada and Mexico, and they go to assembly plants in the U.S. So all the parts be there. All the parts will drive up the cost of the vehicle.
And so is Lacombe Ford seeing like any immediate impacts here? I know you mentioned some of the price of the vehicles have gone up, but is there anything else that you guys are seeing right off the hop here?
Extreme consumer anxiety. People are either rushing to purchase vehicles that are in the stock or in transit before price increases are applied to them, or they're just putting off purchases altogether because of the uncertainty, whether it's their own job security and their own economic viability.
Finally, we go to RD News Now reporter Ashley LaValle-Koenig, who spoke Tuesday afternoon with Chris Windrum of Build Central Alberta.
What kind of a challenge do these tariffs pose for the home building industry, particularly in Central Alberta?
Yeah, the tariffs pose a question for the industry. I think more than anything, as everyone is navigating through it together. The big thing in our industry, talking with members locally, is really to monitor and continue for the next 6 months and keep making sure they're finding the solutions that are important for their customers. I think is the biggest sentiment that we want to make sure we talk about.
And for people who are maybe unfamiliar with how the home building industry works, what are some of the materials that industry imports from the States that might be impacted by these?
Good question. I think the biggest thing that we're trying to make sure we're monitoring is what is the countervailing tariffs being applied by Canada. And when we're talking about that, we're talking about glass, appliances, hardware, metals, drywall, HVAC systems. So that's kind of the one that would have a greater impact in the industry. So we're just monitoring and assessing still at this time.
And can you explain just kind of how a counter tariff would have that greater impact, just for people who are not so plugged into how the tariff situation really works?
The U.S. tariffs will have a muted effect on construction costs in Canada. And the Canadian counter tariffs and the overall economic impact from the U.S. tariffs is kind of where the effect will come. The U.S. tariffs will affect American consumers as the Canadian tariffs will affect Canadian consumers.
What can different levels of the government do to support this industry in this kind of a time?
So at our association, home builders can know that we have 3 different associations supporting them through these tough times. We have the Canadian Home Builders Association, which represents residential construction nationally. And then we have Build Alberta, which does a lot of the work from the provincial lens. And then we're the ones on the ground that talk to members to try to tie together where the issues are, and also make sure that we are advocating to our local municipal governments.
What might that advocacy look like to municipal governments? What are you guys asking for?
I think when we look at the tariffs, it poses a different question for us now, and making sure we look internally and be proud to be Canadian and support our industry, support our businesses the best way possible. For residential construction, if we want to look at offsetting tariff costs, to look to reduce development charges, to speed up approval process times, and even remove interprovincial trade barriers, are all great ways that municipal, provincial, and federal governments can help our industry offset these tariff costs to focus on housing affordability.
So given that Red Deer in particular has been really struggling to rise above a less than 1% vacancy rate, how might this challenge impact that endeavor?
Red Deer, over the past few years, Red Deer has done a great job with building back our vacancy rate. We're currently sitting at a 1.6% as of October 2024 through CMHC data, leading to more supply for the rental market. We will be continuing to monitor and continue for the next 6 months as projects are still being built, and we should still see that vacancy rate percentage grow for the better. And we'll just have to keep monitoring and assessing. We hope that we see more doors come online as these apartment buildings are opening over the next couple of years.
Just to kind of wrap up the different points that we've touched on so far, what would be the main message that you want to communicate to Central Albertans that are wondering what this is going to look like for home building?
I believe for people in Central Alberta who want to know more about these effects on the residential construction industry should come to the Red Deer Home Show happening this weekend to talk to the businesses, the suppliers, the trades, the home builders, the land developers, to know what is happening in the industry and to know when the best time is to build, to renovate, to purchase. We are all in this together. We are going to make sure that we take a very Canadian approach on this and make sure that we are informing each other and finding the best way forward together.
Once again, for more tariff-related news, check out rdnewsnow.com. We'll be back Friday to our regularly scheduled programming, so watch for that on Spotify, Apple Podcasts, Amazon Music, Pocket Casts, and of course you can find the Everything Red Deer podcast right at rdnewsnow.com. I've been Josh Hall. Thank you so much for listening.
This has been the Everything Red Deer podcast, powered by RD News Now. This podcast is produced and edited by the team at RD News Now and Pattison Media Red Deer. Make sure to download our mobile app and subscribe to our free daily newsletter by visiting rdnewsnow.com. Thanks for listening.